Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today is Friday. Today we're doing our market wrap up, right? You all know the markets have been red hot this week, But we were prepared, right? We talked about a cool off this week, and we pretty much weathered the storm. Hopefully, you all made money on the way down, just like you made money on the way up these past couple weeks. But before we get into it, make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. So let's talk about it, right? Let's talk about it. Today, the markets came back down hot and heavy as we expected. We talked about this on Sunday, Monday, and last week, Friday. So there's no reason why you all were not prepared, right? You got to be prepared for these things. We looked at the charts. We said, hey, we've been running up about 4 weeks straight. We had some decent news from the Fed, CPI numbers, but then we had the Fed speech, and we pretty much we added up, did the math, did the numbers, and we pretty much came to the conclusion that hey, we should be anticipating a pullback, and that is exactly what happened this week. We had a major pullback as well as the market trading sideways, and there was a lot of money to be made on the way down. I mean, today, I want to say Wednesday as well as Tuesday. So a lot of the week pretty much traded sideways, but it was still a lot of money to be made. So let's take a look at it, right? Let's see what happened for today. We actually got the Dow down 0.86%, the S&P 500 down 1.29%. That made my chest hurt. We got the Nasdaq down 2.01%. Oh my goodness, because we know that's tech. And we got the Russell down 2.17. And look at this, the VIX up 0.5%. So you got to know our fear and greed index is going back the other way. And we hate to see that, right? We hate to see that. Let's see what we did for this week, right? Let's see how far did we come down? Only 1%. Although each day has been bad in its own right, it's pretty much traded sideways. So we're not hurting, right? We're not hurting. We're not missing much. The S&P 500 in the past week only down 1.16%. Check out the Dow. For the week, let's see. Only down 0.16%. So we cooled off, but not a whole lot, you guys. Not a whole lot. So it's not enough to hurt us. The Nasdaq, however, tech took a hit. Tech took a beating. Just gonna be honest about it, right? I saw Tesla come down heavy after running up to the moon almost. If you guys are fans of BBBY, Bad Bath and Beyond, you all know. Hopefully you guys got out and y'all weren't holding that bag because it plummeted. It's plummeting. But I'm gonna take a look at that next. So we got the Nasdaq down 2.74, and for the week we got the Russell down 2.27%. So we got the Nasdaq and the Russell pretty much taking the biggest beating, but we also got a lot of the small stocks out here, especially one of these that just kind of took off on its own right. And let's check that out. Bed Bath & Beyond, BBBY. This joker went from $5 all the way up to 1731, which I actually believe was a lot higher than that. I'm not sure. That number don't seem right to me. So matter of fact, let me go check out my Webull. Let's see what we can find here. Because I trust Webull a little bit better, right? These numbers are crazy, right? This joker ran all the way up to $30. From $5, y'all. From $5 down here, it ran all the way up to $30 on the high. $30. So if you were in there at $5, you had 100 shares, you got $25 per share profit. So you paid $500 for those. Y'all know what I like to do. Y'all know I like to pull up the calculator. We're going to check out the numbers, right? So let me put this calculator over here for y'all to see. I'm going to size it just right so everybody can see it. But you know like what I like to do. So if you got $25 at 100 shares, 25 times 100, you should have got $2,500. $2,500 off $500. So you got a $2,500 profit off $500 if you invested in Bed Bath & Beyond any time before, really, August 5th. Because that's when it started running up, it looks like. It looks like it started running up on August 5th. This joker's been still sitting there chilling for who knows how long. For the past 2 months, trading at $5, and all of a sudden it went to the moon. WallStreet Bets does it again. Man, I've been watching them folks. I watch them. WallStreet Bets, they do some stuff on Reddit, man. They really be out here pumping these stocks because look at this. And again, I'm hoping none of my followers were the people who got caught holding this bag because look at it. Look at the drastic drop from here. All the way from $30 back down to $11.03 currently. Bed Bath & Beyond is taking a hit. But, if you got in there, you knew the risk, right? You knew the risk with this. At least that's what I'm hoping. That's what I'm gonna say because you follow me. You know we make good investment plays and things of that nature. So that's what we got, right? While we here, let's take a look at our spot. Because you all know we already predicted. We predicted that it was gonna cool off. And what did we say? I want to say our first level was 420, 472. We said if it hits that, it's coming down. Look at this. We got our support here, which actually is up here. We got a support up here, 420.14. If we break this support, we can expect it to come down even further to about the 417.20 line. So if you all trading the SPY, keep that in mind, right? If we break the support line of 420.14, we got another support at 420.14. If we come below that, we can potentially see this joker coming back down here to the 411s. So we're going to be very careful as we trade coming into the next couple weeks. However, I am still very much bullish on this until it breaks this 420.14. I still believe that currently the market is bullish until it breaks that, because that is going to be a break of structure for us, right? Or a change of character. Because as of right now, the market has ran up, but at no point did we go below the highest low, right? Which is right here. This is our highest low, and that's currently sitting at 419.84. So when we come below that, that's when I think that we're going back bearish, and I believe that the market could potentially come down. However, you all know we're gonna make money on the way down, just like we do up. So if it comes down to this 419.84. we're going to see it's put season, and we're going to start running those puts up like crazy. I got a lot of new people I've been training. Hopefully I'm bringing them on the team. But they've been making money with me. I'm loving them to see it. And actually, I'm going to start showing y'all they money making too. Because I think they deserve to be awarded, right? Or at least, get some acknowledgement. But we got a lot more people wanting to learn, and I'm loving to see that. I love it when people want to learn. They want to get in here, and they want to educate themselves, just like many of you. But just before I get off of my high horse, before I get done talking, I want you all to see the fear and greed is now at 51. We were hanging over here at the 55 for a couple of days, 55, 54. We finally back to neutral. If we come back to fear, you all know what's going to happen, right? We know the market is going to continue to plummet. There's nothing that we can do about it. I did have a nice little article here for you, but I don't believe it's really true. I don't think it's relevant, at least. So it says, stock slide as short sellers cash in on Fed speech. So they believe that the Fed is responsible for the current dips in the market. I think that what the Fed said was what was to be expected, right? We expect them to continue to remain aggressive because one drop in the CPI data does not signal that we hit the peak. We have a long way to go before we know whether inflation will continue to come back down or whether it could potentially spike back up. So I would actually appreciate it if they continue to stay aggressive. They continue to push the interest rates up and push inflation down. So I know the more aggressive they are with that, the sooner we come out of this inflationary situation. And of course, I do anticipate, I think that we're currently in a recession. I do anticipate a worse recession later on for us to be impacted in some other way. But as of right now, I want to see some green. I want to see some better days. And I think the market should have priced most of this in, which is why we saw this recent run up. So you have a little dispute right now about whether it was a bear market rally or whether it's a bull. We're becoming bullish again. I don't know. For me, I believe that we're going to let the charts and the fundamentals kind of play it out, and we'll see as we go. For us, that's why we're trading every day instead of weeknight long trading and swing trade. So right now, we're going to continue to stack up cash. We're going to continue to day trade and make as much money as possible on the way up or the way down. And we really just going to get in here and learn what we can learn every day on our journey to become wealthy. So that's what I got for you guys. I thank you all for joining me on the journey to become wealthy. Hopefully you all are making money. And really just make sure you like, subscribe to the channel because I really appreciate it. And I'll see you guys later.